Good morning, traders. A very good morning to you. It's 9:30 at the moment, exactly. This is the TD Academy live trading room, and it's really good to be with you. As always, guys, for us, it's really a pleasure. Myself and T, I'd like to greet everybody. The lovely Tandi, I see you right there. I see Jules. I see Savage Transfers here. Good morning, guys. Good morning. Good morning. Good morning. Let's get our protocol out of the way so we know that we know what we're dealing with. We will be discussing quite a bit of information, guys, in every one of these sessions, not just this one. When the NFP comes, it's going to be exactly the same thing. But please, guys, it's opinion. Let's not construe that as advice in any way. All right. All right. Familia, good morning. AV Trader, Intel, Lynette, Tanya, Nontle, AV Trader, good morning. Good morning. Good morning, guys. All right, so today's NFP, guys, we will be streaming that live today, myself and T. We'll be streaming from Johannesburg. And just a note there, guys, there will not be a 12 o'clock midday, or at least 12 o'clock report. As Tandy likes to put it, the midday drive. There will not be a 12 o'clock trading room. We're gonna hit the NFP straight at 2 o'clock. So you can join us right there. All right. On YouTube. Here on YouTube. All right. Sekwane, no, we don't have a Telegram group. Sekwane, we do not. I see Night and TP as well. Good morning. No, we do not have a Telegram group. Nope. All right. So if there's anyone that you've seen with TD Markets, the Telegram group, it is not us. We are licensed brokerage, like licensed financial service provider. And maybe just on that one there, guys, which I think is good for everybody to know. If we embark on anything, our regulations is very important to us as a licensed FSP. Okay, we don't just get into anything. We make sure that it's compliant. We have a compliance department team that handles all our regulations before anything goes out to our students, to our clients. It does go through all the proper and appropriate channels because we are licensed. We are by the FSCA. So if there's anything that you hear from us, it's because it has gone through the proper channel. But thank you for the question, because that helps us give more information to our clients. All right. So are you guys ready for NFP today? Have you guys funded your accounts? If you are going to participate, you can let me know in the chat facility. Are you guys ready? Quickly, guys, let me know that. I know that this session won't be that long, guys. Obviously, we really prepping for this afternoon. So we're not going to take too much time here this morning. We're going to maybe go for about 30 minutes or so. And then we're going to start prepping then for later this afternoon, myself and T. All right. So let's get going, guys. Let's move. Let's start at the baseline that we normally start with, guys. Sorry about that. Let's start at the baseline. We're going to start with the oil price, guys, as always. Now, family, I think we're becoming better and better and better every single week. I hope you guys can see that we're becoming more accurate every single week. And that speaks for itself, all right? That speaks for itself. We have the oil price. It has extended again. So from 6 o'clock, we extended at 11 o'clock again, which I said to you guys, watch it very carefully. Watch it in the evening because we're going to get some action. Now, the oil price has been the barometer, the metric that we used, for some dollar strength. And because of the oil price moving up, it increases inflation fears. The dollar strengthens. the interest rates needs to be hiked, and that's what the Fed is busy with. All right. Now, the Brent did rise, guys. We went to obviously the $83 a barrel today. It's building on the previous session's gains as those tensions in the Strait of Hormuz has unsettled, the markets, and it's cast fresh doubt over efforts to fully reopen this vital route that they call the Strait. All right. Reports did indicate that Iran struck what it's described as hostile targets in the Strait after some explosions were reported near, and I'm not 100% sure how to pronounce this one, but you guys will forgive me if I butcher it. It's called Qasem Island. And, under the proposed, I'm doing in inverted commas, proposed Iran-Oman agreement governing the waterway, we're seeing that Tehran seeks to actually prevent or prohibit the U.S. and the Israeli vessels from pushing through the strait. And they require countries, deemed hostile to pay compensation before being granted passage. Now, Iran has also, guys, proposed penalties equal to 20% of a vessel's cargo value for violations. And they've said that the strait would only be fully reopened once the U.S. Marine or the U.S. maritime blockade is lifted. Even the parliament, the Iranian parliament, is currently reviewing the draft proposal. And, it's outlining stricter conditions for commercial shipping through the strait, especially from what the markets anticipated. So, again, guys, again, yeah, hostile, exactly. Yeah, Brett. So, guess what? Will, Tanya, Nontle, Trend. Guys, listen to this. Have we not seen this script run for the past couple of months? What did we say yesterday? That if this price continues to go up, there is fundamentals that we're going to get in the morning. Did we or did we not come to that conclusion yesterday? Please let the guys know that's joining here for the first time. Let them hear about the type of things that we are discussing here. All right. We had mentioned yesterday that there will be a reason why the oil price has surged to the upside. Here we just got the reasons, guys. And look at that. So we are not unfamiliar with this. This is no stranger to us, guys. We had mentioned this. There it is right there. Okay? Now, what that means for us is the following. With that surge, we see there is a move that's backed up by some political fundamentals. All right? And what's important for us is that price now, because it's created an impulse, and, now we wait for a correction. Now, that correction, it's now 938. Price can come down during the Asian and London session, and then later on find support and then push up again. That is absolutely possible, guys. It did it here before during the London session. All right. It definitely did it here. All right. So it can definitely do it before the NFP. That's a reality. Now, if it does that, if the price comes down like this, it means that we're going to see a elevated move to the upside, all right, of gold and of silver. Now, what's important here, I want you to really look at this. The correlation is off because here we have oil that has gone up. We should have seen the silver come down a little bit more, but actually it's pushed up. So let's look at that. So this morning, here we have it. Look at this. We have the oil price go up, moved up about 1.43%. And we saw the silver also move up here. Now, this lets me know that, hey, there might be divergence here that we're seeing for later on. There we go. There it is. There's a divergence. Do you see that? Look at the divergence right there. There and there. Now, what we do know about the US, guys, what we do know about the US dollar is that there is some talks here that the markets are expecting, a lot of hope here for the dollar. It seems like, the index is a little bit changed around the 99-point level. It did rebound a little bit yesterday, but investors are obviously cautiously, I beg your pardon, waiting, for the July job reports. There is obviously the hope for any fresh signals on the labor market strength. And obviously, they are connecting this with the Federal Reserve monetary policy. Fed officials have increasingly signaled they are obviously prepared to raise those interest rates because of the inflationary pressures, with markets now pricing in a 25 basis point hike next month. All right. We even have the Financial Times that reported the chair, Kevin Wash, is willing to raise those rates next month if inflation readings in the coming weeks remain elevated. So the Fed chief is definitely expected to maintain his stripped back communication style, if I can put it like that. He's had a lot of criticism from the financial markets, but we are seeing that the markets are looking at a much stronger job report today. I believe they're looking, towards the 80,000 or so, for fresh jobs to come in. I believe the last was 50,000, but we will get into those specifics by the time we're streaming, okay? So if that happens and there's divergence and we get a much higher number than 50,000, I think it was 50,000 the last time, guys. I stand to be corrected here. Previous was 57, yes. 57,000, and there's obviously now the forecast of 85,000. But guys, I'm not only speaking about the non-farm payrolls. It's not only that figure that we are concerned about, okay? We will be giving a bit more detail on the average hourly earnings as well. We'll be giving some more detail on the unemployment rate when the NFP is streamed. But for now, we're just giving a bit of a baseline, okay? So we are seeing that they're looking to increase. If we get that increased number, then this divergence for us could be coming out. That's on the silver. That's on the gold as well. Obviously, guys, the opposite is going to put pressure on the dollar, and we're going to see the gold obviously push up a little bit here. Remember, the gold, what we're essentially looking for. Remember, I spoke to you guys about this. I said this move to the upside, that move is powerful. This is going to be a powerful move. So if the oil price continues to come down, we can see the pressure on the dollar, and we could get this beautiful rise here. But guys, once again, when it comes to the oil price, there's no stable place at this point in time. Because if I go to the oil price and I zoom out, you're going to see here, guys, that the oil price is back in the areas at the end of February, okay? We saw this entire thing push to the downside, okay? End of February, beginning of March, we saw this thing push to the downside, up and then down again. So you can see prices entered into that volatile state. So that's the reason, from a technical standpoint, there's a lot of reactions here. So if the oil price can get out of the volatile area, okay, where we normalize a little bit, there's going to be less pressure on the other assets. But again, they're so intertwined with each other that if the oil price increases, it affects manufacturing, it affects logistics. So that forces the hand of investors to go and look for value elsewhere. So they're going to go to gold, they're going to go to the dollar, they're going to go to the yen, they're going to go to silver, they're going to go to BTC, they're going to take their money and they're going to go to different places, all right, so that they can get a return on investment. So they're so intertwined that you're never going to 100% be rid of the volatility, even if oil stabilizes, all right? But right now, there's just no peace. As long as there's no peace in the strait between Iran, US, and Israel, guys, this is going to go on for some time, all right? And Iran is now taking a lot of territory by imposing penalties of 20%. Think about it for a second. That was not spoken of. We did not hear any 20% 2 months ago. We're hearing of that now. So this thing is escalating. It may seem like it's not. And I'm going to be very bold about this, guys, all the nonsense about agreements and, there's peace deals, there's a 14 or 20 point deal or 10 point agreement. Guys, it's all nonsense. How can there be all this agreement or the words agreement flying around, But then on the other side, the other extreme side, there is more missiles. There's now a 20% penalty, and the oil price just keeps on surging. So let's not be fooled by those types of things. All right, everybody, it's very, very important. Now, with the oil price then reacting, the gold, the silver, look at the AUD. It was coming down nicely with the gold there. And you can see, because the gold has been affected, the AUD is affected. So we're going to watch those two closely, because those are two opportunities that we can have at the NFP this afternoon as well. The NZD USD has not moved at all. Look at this. It has not moved at all, guys. It is literally consolidating in the same place. It is now 3, 4, 5, 6. This is a 7th day. It's a whole week of this resistance. But we can see that there is divergence definitely at this resistance. All right, some may even call this a descending triangle. I'll be very frank with you guys. I understand why people use the patterns. Obviously, it's predictable. There is a accuracy percentage they put on it. There is a probability that they put on it. So I understand why they do use price patterns, and I'll give it credit. There are certain things that do pan out. However, there's also been other moments where, it may seem like a descending triangle, but then it actually pushes way up and past and breaks the resistance. Head and shoulder patterns have been seen to do that as well. So it's not just the descending that Ash is referring to. I'm referring to all price patterns. Sometimes there's an inverse head and shoulder pattern, but then it may look like a left shoulder, a head and a right shoulder. It's supposed to break the neckline, but then it goes further down and it becomes something totally different. So I understand that the guys are going to be using price patterns, but let me also just put in, a contrast there. Try to get the understanding of the market structure first before you dig into price patterns, because you can fall into the habit. And guys, I'm going to be honest with you. If you go into neuroscience, look, I'm not a neuroscientist, so I'm not going to speak in depth, but I will speak about what they have made it easy to understand, and that's how to build habits and how to unshake or how to unlearn habits. And many of these neuroscientists, they have dumbed it down for us, for us laymen that's not professionals in that world, that can understand how to practically dismantle a bad habit. All right. And they've said it. The brain doesn't know the difference between the good or the bad. Is everybody with me? It creates a pattern based on reward. And if you keep giving it that reward, you keep following into the same pattern. So many guys get into price patterns because of a reward that they got. Let's say you made 10,000 US dollars. Listen to that, guys. 10,000 US dollars. And it was because of a head and shoulder pattern. That can easily become a reward for your brain. So your mind's going to be looking for head and shoulder patterns everywhere. All right, I see some of the guys, the Aries, X-Ape. I'm not so sure how to pronounce that word there, but gold is about to buy. That's very vague. I'll be very honest. That's very vague. Daily, 1 hour, 15 minutes. Well, what you see, guys? Let's try and move away from that. Okay, let's try and move away from that. Hence, I'm saying this is not a signal group. I want to just really make sure that is understood, guys. That borders on advice. We can't do that. It's about to buy. Where? How? What support? Are you scalping? Are you swinging? There's risk involved. Lot sizes. There's not everybody's the same. So guys, let's try and stay away from those type of stuff. Okay, let's try and educate and try to say something that's going to bring understanding. I think that's what we want to be known for as TD Markets. That we're competent, we understand what we're doing. We don't just want to act like the internet, where it's just let's just get into it. All right. All the patterns make me confused. There's so many. Yes. Then I also see the patterns all the time, and then maybe it's not. Yes. Savage, many people recommend not trading Friday, Monday. What is your opinion? Savage, thanks for that question. All right. My view, thank you. The opinion, not advice. The opinion, thank you for that. That is to the T. Mondays, Fridays, I understand why they'd say that. More so Friday. Fridays, less liquidity, weekend starts, many of the assets can slow down. That's very important. That's the first thing. Mondays is actually a very interesting one because Mondays can be very profitable as well after the weekend. Because remember, if there's any crazy movements over the weekend, like anything political, maybe Trump said something about Iran, Sunday night, Monday morning, you see gaps. A gap, which is slippage, which is an influx of lots of money that comes into the market, all right? That can gap, and then later on in the day, the gap can be closed. That's a trading opportunity. So I think it should be rather viewed more objectively and not as a blanket to say don't trade Mondays and Fridays, because setups can be created on a Monday as well. That's a very, very, very important one. All right. I'm seeing there, monkeys are understanding what we see. Yes. Twist hello to you as well. Aries X, what you trading in NFP? We're not sure yet. All right. We are looking at all of the dollar pegged, at least all the popular ones, the silver, the gold, all our major pairs, our major indices. So we're not sure yet. We are data dependent at this point. But this might be your first time with us, Aries. Maybe that's why. It could be your first time. If it is, welcome. It's good to have you in this community. The more you stay, the more you'll learn how we push forward here. All right. You'll check us out at 2 and you'll see how we go about looking at the charts. All right. If you do join us, it would be great to have you, obviously. All right. So guys, we can see now that there's a resistance that's panning out. There's divergence. We have the structure in place. We have highs, higher highs. It's as clear as daylight. You can see it right there. Are we together? You can see that the impulses are becoming shorter, all right, and lower. Are we together? So that's important. Structure first. And if we are going to be breaking down during the London session, remember, this is exactly it. When I go to my trading sessions, we are currently in the London session. This resistance was built up. Not only do we see the Asian low here, but yesterday there was no depth in the gold, really, when you're looking from a structural perspective, compared to this impulse. This impulse, it smashed through 3 sessions in the day. Asia, London, New York. It comes back and trades so closely together and then creates a new high, which doesn't surpass the Asian session of yesterday. So this is worth looking at for this afternoon. All right. And so we're going to be seeing what happens during these sessions today. So guys, watch the gold and the oil price very carefully this morning. Watch them during, obviously, the Asian session, which will finish roughly around 11 o'clock this morning. And then watch the London as we get into 2 o'clock. All right. Watch that very carefully. Because me and T, obviously, we're going to see how long the session goes. The NFP is coming out at 2:30. We'll be streaming at 2 o'clock already. So obviously, there's a very, very big chance that we could still be streaming at 3 o'clock. We're going to see how long it takes. Sometimes it's a much quicker session depending on the movement, and sometimes we wait a little bit longer. But I can tell you today, guys, the NFP is the only session for the afternoon. All right. So let's watch this carefully. Let's see if the job market is good, and then we take it from there. All right. As far as the other pairs are concerned, guys, look at this. It's also done nothing here. Let me put on my trading sessions here as well, so you can see for yourself. Look at that. It's literally just bouncing and having short movements within the sessions. So we would essentially need price to really break through all of these supports, because those are support areas. Remember, when you look at how people in the world, I'm talking about institutions, all right, investors, how they interact with the markets, they don't interact necessarily with one level here, 1.33873. No, they interact with zones. And those zones, they find them during the trading sessions. That's why when you read the news, you hear them say the Asian markets were weaker. They'll say, no, listen, look at what all of the European currencies did during the London session. Do you see that? They will give a report on that time zone where the trading became apparent and more active and so forth. And the second thing is they also follow periods. They follow quarterlies, they follow monthlies, they follow weeklies, all right? So that's why you'll see inflation year on year, inflation month on month. That's how investors think. They think on with data. T was doing our market review this morning, Mr. McCaughey, right? And he said something very, very, very important about the Federal Reserve. Him and our head of sales, Xander, there was chatting, and they exchanged a few things there. And they were chatting about the amount of meetings that the Fed has per year and how it is obviously they don't have to have as many meetings now as what they did during COVID, which was a very interesting discussion. And T said something interesting there. He said that the reason why they don't have to have as much meetings is because the Fed is data dependent. And that is absolutely true. So he was hitting the nail on the head. They are absolutely data dependent. And if they have frequent meetings, what that means is, and this was his words, the data will remain the same. There won't be much change. So investors react to data. Is everybody clear? Let's just pause there for a second. So what we're looking for is a change of data from 57,000 to 87 or 88 or 90,000 or 100,000. That data is what creates the reaction. That's why we become bored when we keep hearing the strait is closed, the strait is closed, the strait is closed. We want to know why the strait is closed. We want the details. All right. I see there, Brett Ash, where divergence start on the actual candle to the candle that's busy. Is that? Yes. 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 Where it started, the divergence is absolutely there. You can see it, right? It started there. Are we together? You see that there? So this 1 hour, sometimes you need to, maybe go to a lower time frame to see the actual divergence properly like that. You see that? Look at that. Are we together? Because this 1 hour is just priced at where the RSI just dipped up a little bit too much and closed. Remember the data window I spoke to you about? I chatted to you guys about? The data window just closed a little bit too high there. That's it. Over 83. All right. So that can happen on a specific time frame with a specific candle. That's absolutely possible. But you can see here, that is from there, divergence all the way down. All right. I hope that answers your question there. All right. Wonderful. Wonderful. Great. So guys, it is really, we want to see a bit of a change in data. As we do know, guys, that there was a time when it was heavy crypto. It was coming in and it was affecting, a lot of the pairs. The oil price came in before that. It was also interest rates, the cutting of interest rates, and they did cut. And now it's hiking. So there's always this data that's going to push. I mean, look at Euro USD here. It really didn't move as significantly as what we would have liked to, right, guys? I mean, if there's anyone that trades the Euro USD here, you'll know that the Euro USD, guys, can give you fantastic moves. It's actually quite, I'll use the word loyal to structure, all right? Euro USD is quite loyal to structure, and it moves smoothly. That's why it's much cheaper. If you are scalping it, you can get in at a very good price, meaning margin now, and you can also get out very quickly because the liquidity is there. All right, one of the most traded pairs in FX. So here we're seeing it definitely showing you signs of it having to break out, and that's the structural prediction that we must get to, or the place that we need to get to, because the pair itself reveals how it moves. Whenever you see the Euro USD doing funny things like this, there's a move coming. There's a move coming. When you see it's done this or it's done that, then you should already expect it's going to start to slow down. Whenever the Euro USD does an aggressive move, Just look at the behavior. It starts to do funny stuff. The moment you see funny stuff, you know there's a new move coming. So these are the type of things that you need to jot down if you're trading them, all right? Which I'm going to go back to, Savage, your question of earlier on about trading on a Monday, trading on a specific Friday. So if the Euro USD here, as an example, on a Friday, has the behavior like this, it's Friday, all right? If the Euro USD breaks out of this today, there's a high probability it can finish its move. Oh, yes, absolutely. 1.14, let's say it breaks out there, 1.14989, that's about 42 pips down. So that's why I said you must look at it objectively. What is the structure looking like? If it's something like this daily, and you're trying to trade till there, no. You see now that there, objectively speaking, from there to there is 146 pips. Do you see that? That's not speaking objectively. That is me as a person now. I'm going to want that. That's what Ash wants. That's what he desires. The market doesn't run on desire. It runs on objectivity. Where's the perceived value? Where there's no perceived value, people still make money. Where there is perceived value, people make money. If people take their money out of the AUD USD and it falls, people are going to sell. If people put their money in AUD USD and the price goes up, people are going to buy. So people are objective about the value, the perceived value. If we can understand that, like the brain, it just recognizes the reward. It's not looking at the feeling, what you're feeling. You experience the feeling, but the brain necessarily, which is very intricate and also interesting. We're not going to discuss any more of the detail because we're not like, I'm not a professional in that specific field, but I'm a human being like you. And we feel certain things, and there's things that we don't want to do, but we still do it. And we hate the way we feel when we do it, but we do it. So that tells you there's a difference. Those habits can be duplicated in trading, where you're making the same mistake over and over and over. You hate the fact there has to be people here that have made the same mistake in trading. They hate it. They can't stand it. They walk away feeling, man, when am I going to get this? I'm never going to become profitable. So that feeling hits you and you still do the same thing the next week. Do you see that? So somewhere you saw something. You saw something that triggered a habit. It may have been how someone spoke about it and it just sounded good and it clicked with you. So that's why education is so important. All right, guys. So maybe just to conclude it, because we can see the movement is not as much at this point in time. The oil price, if you look at it from a 1 hour perspective, has not moved much. All right. Let's finish off with the US stock indices. All right. So we still have not moved here. A US 200 has not moved. We wanted to capitalize. All right. I was looking for a area here. It still has not come back. From where I drew 9192.25, look, price has still not come back. Then you find the NAS 100, look, it did go down as analyzed, came up a little bit now, but again, there might be a deeper movement down here because all of this is divergence. This is actually momentum that was stopped. There are more sellers in here than what people think, because by now there should have been some form of extension. But again, data dependency. That is what we're going to look for at 2. All right. Then US 30. This one completed what we had analyzed. Literally completed it. Look, from 54,000 to 53. Fast moving index. This fast moving index gives great moves, but it can also be unpredictable. Be very, very careful, especially today, guys, because this guy is a wild one. This one is like the oil. Where's Shira? I hope Shira is still on here. The US 30 is like oil, all right? She can be very hard to satisfy. And it's very important for us to plays hard to get, can be crazy all over the place, but it has fantastic moves when you actually catch it very nicely. Look at the S&P 500 doing a step-by-step approach. Classic structural trending behavior. When it comes, guys, to indices, please make a note. They are known for trending. They are known for trending. They trend. You can look at them. They are trending very well all the time. They're going up. If they're coming down, they are creating the lows, the lower lows. Never mind this structure here. Never mind. This is all this is substructures. This is the main structure. Low, lower low, lower low. That's it. High, higher high, higher high. This is substructures inside there. So indices are known for trending. All right? Indices are known for trending. They stay within a trending nature. The commodities, they don't stay in a trending nature. They disrespect the trending nature, but they stay within structure. Listen to what Ash is saying to you. Listen to that. So what gold will do, you see this beautiful move here? You see this beautiful move? You see this beautiful move? This is a trending nature. What gold will do, or oil will do, or silver will do, it will disrupt this trending nature. It will push up, up, up like it did, up that way, hang around, and then boom. That's gold, that's oil, that's silver, but it still stays within structure. You see that? That's the difference. So when you can understand and see that, now your risk becomes different. You can't have the same risk when it comes to commodities versus indices. They move differently. So the setup is going to be differently. Sorry, wrong word. They are going to be different. Very important information here. You're going to get this in the Zoom classes. All right, everybody, just so you do know. All right. So we're not seeing much here at this point. We're waiting. Look at the USD JPY. Yesterday, beautiful movement to the upside. And then it stops and it goes sideways. Look at this. You see that? So if the oil price comes down, guess what happens? If the oil price comes down, pull back. You see that? Impulse, pull back. What happens after an impulse? Pull back. All right? And as you can see, we did charge the 38 area. Definitely. Look at that. Do you see that? So 38, I told you guys, is a very important one on the fib. We understand the 50, the 61, great. But 38, very important area. Could still do this later today, before the NFP. That could happen later today. All right. The USD CAD, we've broken through. Look, we've come up. We've broken through that resistance. Look at that. All right. Is everybody clear? And then CAD JPY. Watch CAD JPY because this one moves with oil. This one moves with oil, as does USD CAD. All right. Is everybody clear? Guys, I think we okay up until this afternoon as far as NFP is concerned. Okay. Then maybe just lastly here, I think the BTC, one more look here for Sammy. We're still above our area there, 64,000. I said we'll have a look at it every day just to check it out. And then USD Swiss franc, we're still stuck in the same place, same block, as basically the same block as yesterday. So nothing yet, guys. We just know we have an elevated oil price that looks to seek for a possible pullback. Now this can happen again, lastly, before NFP. It can happen during NFP. Please understand that, guys. All right. And most importantly, this one may stand still during NFP, and then the gold, the silver, the euro, the pound dollar, NZD dollar, AUD dollar, all of them move. But then the oil stays still and just consolidates. And then later on, it moves. That can happen. So we're looking at this thing from all angles, guys. All angles. All right? We're looking at it from all angles so that we can be ready for when the data comes out. But we'll go into more detail, obviously, obviously with zones, with levels and so forth, supply and demand areas. As you guys know, that's what we normally do in our NFP streams. We will let you guys know of those levels and then we'll take it from there. But for now, at least, guys, I think we're okay. We understand what is happening. We will be back here at on YouTube at 2 o'clock. So remember, 12 o'clock, there is no midday report today. We're going straight to NFP. So if you do dial in at 12 o'clock on YouTube today, you're not going to find us streaming. You'll find us at 2 o'clock. At 2 o'clock. All right, everybody. I'll see you guys a little bit later. With T, we'll be streaming the NFP together. Fantastic one that we had this morning as a setup, a prelude to what is coming. All right. See you guys very soon. If you're going to participate, make sure that you fund your account so that you are okay. Make sure you get your account type right. Is it a mini account? Is it a cent account? Is it a standard account? So that you can obviously take advantage of anything that does happen during the NFP. All right, guys. Have a lekker one. Have a lekker one. Stay safe, and I'll check you on the charts in a couple of hours. All right. Baie dankie, mense. Ciao, ciao.